With December putting up record low numbers in both sales and listings, most felt like a crash was inevitable and that 2023 was going to have some major adjustments in the market. But in January, we saw the number of mortgage applications rise by 28% and interest rates decline, which led to more homes going under contract in January than we had seen since mid-August of 2022. And with mortgage rates coming down and inventory not going up all that much, this has drastically changed the direction that the housing market is headed. So did buyers miss their chance to take advantage of the buyer's market here in the Phoenix area? Are mortgage rates going to stay down or go down even further? And what's likely to happen in the overall housing market over the next few months? That's what we're going to take a look at in today's video. Now, everyone is still watching to see what the Fed is going to do when it comes to the Fed's funds rate. And from the looks of it, they're planning on slowing the rate hikes. In fact, the article goes on to say this: the Federal Reserve officials are preparing to slow interest rate increases for the second straight meeting and debate how much higher to raise them after gaining more confidence inflation will ease further this year. In recent public statements and interviews, Fed officials have said slowing the pace of rate increases to a more traditional 0.25% point would give them more time to assess the impact of their increases so they can better determine where to stop. Overall, right now, in the Phoenix market, our home sales are down. And we all know the primary reason for this is the increase in interest rates, as well as how massively our home price appreciation has gone up. But the number of houses listed for sale right now is also down. And that combination is stabilizing the Phoenix market. Now, this might sound counterintuitive because everyone was talking about historically low inventory last year at this same time. And it was. However, this is because homes would come on the market, they would get multiple offers, and go under contract just as quickly. So it wasn't that we didn't have inventory coming onto the market, we just didn't have a lot of excess homes on the market for sale, all because they were selling so fast. And this year, we just don't have the number of homes for sale that we did last year. Much of this is also due to the interest rates. Sellers that have locked in a low interest rate don't want to sell and get rid of that, so they will stay put. Now, although the number of homes for sale are down, they have risen since the beginning of January. This has given the housing market a boost. And again, this is all due to interest rates coming down. Because the interest rates have come down, this has gotten some buyers out of hibernation and back into the market, where some other buyers are very skeptical about the interest rates staying low for any length of time. Lawrence Yun, chief economist for the National Association of Realtors, said in an article in early January that he believes mortgage rates actually peaked in October of last year when they reached right around 7%, noting that they've already dropped down to about 6.5%. And that figure he expected to slide even further as we got into January to around 6%. And now here we are 3 weeks from what he said in early January, and interest rates are right around 6%. He goes on to say that the drop is a signal that the Federal Reserve is likely to be less aggressive on interest rates based on calming inflation. He went on to say this: I think that will bring some buyers back into the market, and job creation also provides the support. He added that rate drops will likely bring buyers back into the market in the spring. Now, I agree with him on this. I believe we have already seen our interest rates peak, and I think we are going to see our interest rates stick around 6% for just a little while. Now, when it comes to affordability, many people are saying that they want to see home prices come down a lot more because they can't afford the home. And although I don't think I have good news for you there, a notable expert when it comes to interest rates, Barry Habib, has given everyone a date to keep their eyes on, and that date is May 10th. Now, he predicted the same thing on November 10th, saying that this is when inflation would come down and interest rates would start to drop. And that's exactly what happened. Well, he's given us a new date to keep our eye on, and he's predicting again rates will fall even further. Now, this all has to do with the PPE and the core CPI numbers coming down when you look at year-over-year numbers. And this is definitely a date to keep your eye on. Now, I mention this specifically for all those people out there that are saying that prices have to come down before they can or will buy again. Something to note is that a 1% drop in interest rate is equal to an 11% price reduction. So house prices coming down is not the only way that homes can become affordable again. Now, I know when prices shot up and homes became less affordable, the segment of the market that was the most affected were the first-time home buyers. And I have said this on my channel before, I am very pro home ownership, but not to the detriment of being over leveraged. So for all of those out there that feel that homes are just outside your reach, now is the time to really pay attention to the mortgage rate, because although they are coming down, home prices aren't just going up. They are coming down and some are settling. So you could be in a win-win situation with lower interest rates as well as lower home prices. One of the other things you need to know as a buyer is that if you buy a home, your home is not going to double in value in 6 months or a year. And you should be buying for the long term, not the short. Now, when it comes to buyers coming back into the market, here in the Phoenix area, that has already begun. As you can see from this chart, the number of homes that have gone under contract since the beginning of the year is pretty drastic. And it is a 22% increase from the beginning of the year. And when looking at our contract ratio, this has gone up for the 3rd straight week. And the reason this is increasing is because of the number of homes that have gone under contract and the lack of inventory coming to the market. The contract ratio number right now is the highest number we've had since early September, which is telling us our market is heating up. As I mentioned earlier, the number of applications for mortgages is growing fast, and it is looking like our spring buying season is going to be better than anyone dared to hope for when looking at the numbers back in November. This overall is giving our market the boost that it needs for buyers to feel more confident and actually get out there and buy. Now, as I have said in other videos, it is not the right time for everyone to buy right now. And if it's not right for you, that's okay. And when we look at our overall Cromford Market Index, which is telling us whether we're in a buyer's market or a seller's market, we can see that we have just tipped over right into the seller's market. And I anticipate this to continue to creeping up little by little over time. So did buyers miss out on our 4-week buyer's market? Well, it's kind of looking like it, but that does not mean that you can't still negotiate. I've had clients recently call me asking me how the market's doing, and I've explained to them all the things we've just talked about. And their immediate response to me is, well, does that mean there's multiple offers again and bidding wars? And are we all back into that same market that we just came out of? And the answer is no. Homes are still taking time to sell. Now, some are getting multiple offers and selling rather quickly, but that's not all of them. The majority of the homes on the market, you still have the ability to negotiate on price, repairs, and sellers are sometimes contributing to buyers so that they can buy down their rate and get an even better deal for their mortgage. The reality is we are getting back to a more stabilized, normal market, and that's a good thing. Now, if you like this video, make sure you take a look at this one. If I can answer any questions for you, please feel free to reach out. As always, I thank you for watching, and I'll see you next time.